Right, now here we have the final one for today, for the moment, and this is the big one, really. What's holding you back, be honest here, from being a successful trader? And if we just scroll through some of these, um, a common one is when to enter a trade. Um, Another one is throwing away lots of profits. Trading plan, once again. Confidence is another one. Trading plan, confidence in the trade. And I think a lot of it that's to do with lack of confidence is perhaps a lack of the understanding of the techniques involved. Um, and if we could, to those that have answered the question with not enough knowledge in this case, or confidence in technical analysis, is there any particular aspect within technical analysis that you're having trouble with? You can't really just come back at me and say, well, it's actually everything. It's bloody everything. I can't do anything. I don't understand it. So it's a case of just try and, if you could, sort of analyze what it is that you're doing when you analyze a chart, and try and pinpoint where it is that you then, instead of it being slightly instinctful, where it becomes, oh my god, is that right? Is that, oh bugger it, when it becomes to that whole sort of oh bugger it approach, that's when I need to know what it is, at what point that you're doing that, and that you're then trading off that simple, well, sitting on the fence, I'm not sure what it is, but it's probably that kind of approach. So I want you to come back with some ideas on what those issues are, with in terms of confidence and knowledge. What is it exactly that's not making you confident? I think this one here from Alan, we've got one saying, remembering my mistakes, forgetting my successes. And that's kind of to do with discipline as well, so perhaps we will do one on those eventually. Confidence again is coming up. Confidence. I'd like to mention this one actually. Ted said finding a good system. Discipline and money management is obviously good, but finding a good system, there is no such thing as a good system. It's more to do with how you set up a method of trading that's good for you based on your knowledge of analysis. And that's why a lot of black box software systems and services tend not to work fantastically well all the time. Aside from Insight Trader when it was running, but we're actually looking to relaunch that next year. But enough of that. But it's a case of understanding that how you read charts, that trading is about understanding the market emotion and the analysis of that, and learning how to kind of read that. And it goes back to that analogy I had of paintings early, where if you analyze a painting, so people see different things, and it's whatever ends up working for you. But the start and end of it really should be a good, thorough understanding of analysis to begin with, and then from that you can then work in a trading method. To take somebody else's system that is really great for them, and it probably just works wonders for them, but I can guarantee that an awful lot of people will take that same system and it just won't work for them. No matter what they do with that information, no matter how much they read it, or follow the guidelines, it just simply won't work. Because otherwise there'd be just an awful lot of wealthy people out there that just do very little. So I think it's very important to understand that there is no such thing as, inverted commas, a system. It's more a case of developing a method of trading that works for you. And that's one of the things really that will certainly be covered in the master certificate that I'm writing now. It's hugely intense. It's taken months and months. But you know, what I aim to address with these videos is some of those issues that perhaps you're having, and a lot of it, in some respects, in these videos, is just going to be me discussing things, and you know, you can obviously ask questions, you know, on the blog, and we want to try and get this conversation going between me and then between you, and then me providing sort of detailed thinking out as I read these responses. So I think it's certainly, Ted, if you're watching this video, forget about finding a good system. It's not out there. It's about understanding analysis to such an extent that you understand it, you know, really, really well, and then from that point you would then look to take certain methods, and you know, don't have to chuck them all at once, but understand you will find that some tools you'll have a more of a kinship with than others, and it's a bit like, you know, I'm a musician. Sometimes when I pick up somebody else's guitar, for instance, you know, acoustic guitar, I can't play it very well because it's somebody else's tool. But when it's my own, and you know, when I go and buy a guitar, I have to sit down with it. Sometimes they let me take it home for a while, certainly if it's a silly price, and you sort of play around with it, and you form that emotional attachment to it. You have an understanding of how it works. And in some respects, that's kind of how a lot of the tools, the technical analysis tools that we use, kind of work as well, because you end up finding, excuse me, you end up finding that there's one tool that you kind of work with, you know, it kind of works for you, and whereas there are others that really rub you up the wrong way, and you just don't like the way it operates. It's, you know, it doesn't work for you. But the only way that you will actually understand how you would get to that point is just understanding how predominantly most of them work. Now, granted, there are bloody loads of them out there. The good ones, and the ones that the key ones, are the ones that, you know, I'll be covering in the course. But it's understanding. Coming to that understanding that, you know, you have to try them to fit. So once you do that and you understand how they work, and then you look as to how you trade with them, and then you begin to develop your own system and your own methodologies. Methodologies. I can't say that. What's up with me today? Methods. We'll just say methods. Your own methods in trading, and you know, that takes time. It's a difficult thing to do. One of the key things that I would also recommend that everyone does, and I have said this to quite a few people, is that you look to keep a diary of your trades. And now I don't mean that to be you know, a simplistic methodical approach where it's you know, I entered X, you know, at this point I exited it here, my stop was here. You're to do that, obviously, but also put down what it is that you're feeling that day, and it's more of like a journal in terms of that you have to understand how you feel when you're trading, and then you can have a really good idea as to how you're approaching your own trading, and how your sort of feelings can really have a real effect on your trading. You have to understand how your own emotion plays in your own trading, and you'll have to, you will over time, you know, if you do this for 6 weeks. In fact, this is what I want all of you to do. I've come up with a plan is for all of you, and I want you to discuss this as well. You know, I want you guys to sort of share some thoughts on any of you that have actually kept a proper trading journal. Not just one where you've sort of, this is where I've entered it, this is where I've exited, that was my start, and God, it was rubbish. I don't want that. What I want you guys to do, and you can discuss this between yourselves, don't forget you can also comment on each other's comments, is to, all of you, keep your own trading journal. And I want that to be a case of when you place a trade, you know, I have the usual information there, but I also want you to put what analysis you had. I know this can be a real pain in the ass, but believe me, it's incredibly powerful and would work wonders for you. But put the analysis that you had, so your thinking behind the reason for the trade, and the tools that you used. So was it moving averages? What were they? You know, was it a momentum indicator? Was it an oscillator of sorts? You know, anything like that you need to put down. And then the final part that you should put down is, you know, how are you feeling? Not how are you feeling about that trade. You can't just say, yeah, this bloody good trade. I think I'm going to make me rich, this one. You know, not just some, don't want nonsense like that. This is, you know, to be shared just with yourself. And if you can't be honest with yourself, you know, as the cliche goes, who can you be honest with? So it's a case of just let it outpour. If you have an argument with your wife or partner or dog, say, you know, look, I'm a bit pissed off today, actually. You know, bloody TV's full of reality. It's not even reality, is it? Reality crap, you know, and fed up with it. And that, you know, it's just, you just gotta get it off your chest, and you'll find that have an effect on your trading. Obviously, if you're feeling that pissed off, you wouldn't want to trade. No, not a good idea. But you know, you'll find that there's days that you would be trading better than others, and you know, you're probably all sitting there. Yeah, well, that's obvious. If I'm feeling great, Stu, then obviously I'll feel better about my trading. Well, you know, it kind of works like that, yes. But you'll also find a pattern. You know, we all have patterns. There's certain times of the day where I would never trade. There's certain times of the month where I know that I'm just a bit grouchy, you know, and uh, you know, it's just understanding, and it gives you a greater understanding of how you are. And also try throwing a different indicator in the mix for a change, and seeing how you trade with that, you know. So that's what I want you all to do, you know, certainly now from this weekend, is for everyone to go out and get a journal, and each time you make a trade, put it as what the trade was, what analysis you put, what tools you used, and how you were feeling. So, you know, and then I want you to share some of your thoughts, not your actual entries, but some of your thoughts on that as you're doing it. So yeah, that's one thing we will do. That's interesting. Teach others how to trade. That's sorry, I'm probably more doing this for myself. It's holding you back. Not sure what what point of that is. Anyway, pulling the trigger. See, there's another common one, and that comes down to confidence once again. Time is also, I've seen time crop up once or twice. Time is a difficult thing because obviously a lot of you are working. It really is difficult to well, this is the thing really. If you're working and you're trading, you have to have a really good understanding and expectation of what those two do to one another. if you're working 9 to 5, that really limits your window of trading. And even if you are working 9 to 5, I would really recommend you don't trade before you go to work. One, you won't be feeling at your best. Two, the cost of that trade in terms of the fees and what have you was certainly much more in the morning if it's a spread, if it's a spread betting in the morning, because they know a lot of people trade in the mornings. So don't do that, and the markets are more erratic certainly before around about 10 anyway. What I would do is, if you get an hour for lunch, some people get an hour for lunch. If you do, excellent, well done. You're certainly in the minority now if you do. But just take 10 minutes and use those 10 minutes to then when you're placing a trade, if you can. I know a lot of companies allow you to access the internet for like a period of time during the day. Use that time, not for your analysis or anything. Use that time for your trading, and then just place a couple of trades. Don't place stops. Common mistake I see too often: people placing stops too close. If you're confident in your trade and you know what you're doing, then you should be comfortable leaving a relatively wide stop. The stop is only there really to protect your overall balance, not to eke out every point of profit from that trade. And then at night, when you get home, launch a program, say like ShareScope, and do your analysis. And it's important to get that kind of momentum going. If you end up being a bit slapdash about things, it's probably a good idea, get home, have a shower, take the wife for a walk, feed the dog, that kind of thing. Get in a good place first, don't rush home, think, oh Christ, put the computer on, check your emails, be all grouchy, kids moaning at you, wife shouting at you, the tea's ready. Wait for that moment of hustle and bustle to pass, and then maybe after you've had tea, which is probably not a good idea if you're like me and you have it very late, but at that point, just settle down a bit, that whole when you're back home, and perhaps have a shower or something, just relax, chill, listen to some music, perhaps even read a little bit just before. Not a trading thing, come on. Just watch a tiny bit of telly, and then when you're feeling relaxed and it's like, yeah, there's nothing on TV, I don't particularly want to watch anything, instead of say just sitting there picking your nose, go and do some analysis, and you'll be in a much better zoned place to be, rather than getting home feeling pressure. Oh look, oh God, what's this? Oh, I got teas at 6 o'clock, 7 o'clock, 8 o'clock, whenever it is. Make sure you're not doing that. So yeah, it's so make sure you're in the right place when you're sorry about that. I'm not sure if you heard the cats tearing hell out of one another just there. So yeah, where were we? So yeah, make sure you're in a decent place to trade to begin with, or certainly to analyze, because that can have an adverse effect on how you would read and analyze a chart. See, there's a good example. Nigel says here, trying to fit trading in with a full-time job, and therefore, which time frame to trade, need to come the fear of losing. Just sort of discussing a little bit, let's talk about fear of losing, which is a common one again. Trading is you're going to lose trading. It's you see, this is the thing that a lot of people when they first start out is that they get really panicky when they start losing money. And the idea is that trading, you do lose money trading, The idea is that you win more than you lose. You know, your winning trades, the profits from your winning trades exceed the sum of your losses, and that's a successful trader because he's profitable. But there is no such thing as a trader that's consistently profitable, that doesn't have losses. And so therefore, and it's one of the biggest hurdles to kind of overcome, is to understand, first of all, understand that you will have losses. First and foremost, you will. You know, you just have to accept that. But understand that it's just part of what trading is. Trading is, you know, a few losses, a big win. A few losses, a big win. A couple of smaller wins, a couple of smaller losses. And that's how it works. But you just got to make sure that your losses aren't huge and your wins are small. That's a poor trader. You got to make sure that your losses are consistently small, but your profits are exceeding your losses on each trade. So you know, you understand that, you know, basically how it works in a nutshell is that, say, out of 5 trades you would say have 3 losses, and the 2 winning trades that you would have would be very strong profits on those that would easily cover the 3 prior losing trades. So you know, you really have to understand that trading is about losing money but it's also about making money and making more, consistently making more than what you're losing. So you know, please, please, please don't be scared about losing money. So Dominic's saying, I've tried and tried, but I cannot seem to get all things to gel. I've tried lots of indicators. Have tried without indicators at one stage, and I thought corrected. So this is where there comes an expectation of what an indicator can and can't do. Indicators can only really tell you what you should see already on the chart anyway. Because they use historical data, they can't project into the future any more than what you could by tossing a coin, for instance. So you know, then there's an argument, well, aren't indicators a waste of time? Well, no, they're not. They allow you to analyze the current data, and if you understand that current data and what you should be getting from those indicators anyway, you would then know if there's a weakness, a current weakness at that point. Really, what indicators do are nothing more than just simply showing you what's already happened in the chart in a different way. And whether that's a more complex way, some people would work with it better, or a simplistic view, such as a simple moving averages. You know, the idea of that is that it's smoothing out that ebb and flow in the market and showing you some form of direction in it. But the idea of indicators as a whole is to just simply give you a different picture on what you're already seeing, and then by using what you see in the chart, what you analyze in the chart yourself, using supports and resistances and God knows what else, and then combining that within the indicators as well, would give you a fair degree of judgment, or better judgment, on whether there is a weakness or strength at that current point. That's all trading is, really. You know, deciding on where that weakness is or strength is, and where it's likely to find the next weakness or strength, and you know, you trade based on that information. So there always is, certainly with the inexperienced, and I don't mean to sort of pinpoint you, Dominic, there, but probably the reason why you thought you cracked it, and you maybe had cracked it, is because maybe you weren't becoming, you were understanding how your indicators were working. And then once you start to understand something, you kind of not focus on it too much, because you understand how it works, and therefore it's a bit like driving, you know, when you're changing gear and you've got the clutch and the brake and the accelerator and you're doing all that nonsense. When you're first doing it, you're constantly aware of the bloody things, you know, you're changing gear, you're cranking the gears and God knows what else. But after 10-20 years, you know, you're flying along, you don't even realize you're doing it. That's kind of what it's like with an indicator. When you first use an indicator, you're kind of clunky, you're kind of clumsy, you're not too sure, you're not absolutely certain as what that particular reading is, or number or figure or point, you know. And then after a while, once you get used to it and you understand how it works, just let me answer that. Yeah, so once you understand how it works, you it kind of almost becomes a little bit invisible, and you're just taking the information almost automatically from what it's giving it, from what it's providing, because you understand it. So maybe that's probably what was starting to happen there, Dominic, is that you thought you cracked it and there it was, and then perhaps you maybe had a few bad trades with it and thought, oh, that's not working. That's another common problem, or a common thing that people do, is they sort of chop and change through indicators. They move from one to the other, to the other, to the next, to the next, to the next. And by doing that, because they don't understand perhaps that you know, you do have losses in trading. So if you say you're trying out one indicator, and you know you're working with that, and you know you have like a string of 3 losses, and you think, oh, Jesus, that's not working, is it? That's rubbish, that indicator. So you move to another one, and what's happening is your analysis is probably slightly changing, and so you're starting with a new indicator. Because you're starting with something new, you're a bit uncertain, so therefore your confidence in that trade is probably lacking a little bit. So you're starting with another indicator, and from starting with that other indicator, you're starting from scratch again. You're trying to learn the bloody thing, and yeah, maybe have another string of losses. Yeah, it's useless as well. And I see this so much, where this whole sort of chopping and changing, as though this sort of holy grail is found in these indicators all the time, and it's not. You know, the indicators are just simply there. The clue is in the name. So don't assume that by, you know, changing to indicator to indicator to indicator is going to help you. It's not. It's really going to have a bad effect on your trading. So it's a case of using the common indicators that the majority of the market uses. Understand them incredibly well, so well in fact that you would understand them better than anyone else. The majority of people out there. Once you understand that, and that becomes kind of second nature, and you understand how you interpret charts, maybe, and I point that out, how you interpret charts, and then how you combine those two together with your indicators and everything, getting that to work is what's important. You will have losses to begin with. You just have to accept that. And you will always continue to have losses. But when you start to have winning trades, you have to make them longer, bigger, stronger. And by doing so, you will, cover your losses and then eventually move into profit. And you'll still have losses, but your profits will be stronger as a result, and they'll cover and exceed your losses. So it's a case of being patient with yourself, being patient with the indicators that you're using, understanding that the indicators that you're using, making sure that the indicators that you are using are the common ones that the majority of the market and the professional markets use, and getting to the stage where you understand how you trade emotionally within the markets, how you read the markets where you are in particular times of day, particular days of the week and weeks of the month and so on, and understanding about yourself personally and how that affects you as a trader. And also, if you're working as well, making sure that you have specific times. It doesn't have to be completely strict with that, but when you're doing your analysis, you're relaxed, you're chilled, you're happy, you've had your dinner, you've not had an argument and anything like that. And in the day, when you come to your trading, you spend 10 minutes placing your trades, go out of the office, or do your trades over the phone, whatever it takes to get away, and certainly don't do the thing I've seen a few times is when people know that you're trading. They sort of everyone can see everyone else's computer in offices, and you know, they'll see something. Oh, that looks fancy, so they'd wander over. What are you doing? What are you doing? Don't let that happen. If that starts to happen, either buy yourself a laptop and take it to work with you and connect to the work Wi-Fi from your car, or get a 3G dongle thing and connect that to your laptop and do it from your car. Or take your mobile, go to your car and put your trades through that you noted the other day, but get a price first. So yeah, you know, those are some of the things that are certainly definite things I would look to do. And that's, as Pat says here, finding the time to dedicate to a consistent routine. So, you know, pretty much cover that. Time appears to be an enemy, a common one. Also understanding, as says Elisa here, is saying, you know, trading requires time to educate oneself, time to find time, yeah. At the beginning, don't concentrate on the fact that you have to trade. You know, there's this whole eagerness on people wanting to trade. At first, you have to understand what you're, you know, it's like, oh God, one for analogies on it. It's like a learner driver wanting to suddenly go and do rally driving. You know, it's like, oh right, I'll just buy a rally car and that'll be all right, and I'll go and drive rallies and I'll be fantastic. It's not like that. You know, you have to learn and understand how your tools work, and in that case it's a car, and understand how you react with the car as well. Much in trading is very much like that. How you react, and learning and making sure you're consistently learning. It's part of the reason why we did the master certificate, or we are doing the master certificate, is that it's a hugely intense program, and it's designed to provide just everything you would want to know, and be very practical. So you know, it's a very difficult thing to actually understand that you're consistently learning about trading, and you always have to educate yourself. I'm always learning how to certain things work, or certain parts of the market, or certain bits of information. So it's incredibly important that you do that, or certainly understand that you're always learning. So I think for this, yeah, so understand that you know, you're always going to be learning, and you know, that's just how it is. It's just one of those things where you're always learning what it is, you know, certain aspects of the market that you need to know. So yeah, I think that's we'll leave it at that for now. I think what we need to do with this one is, I think we need to have a discussion on what you feel the first area that we should cover. I know we said in 2, I want you guys to in video 2 that I want you guys to go through some of the replies that you've had to questions 2, and to read everyone else's, and then to sort of come out with some ideas there. I think with this one we need to really get a good idea on what the first video should be. It's kind of based on a little bit on discipline and so on, but I think what, you know, the basic question I want to know is, the basic question I want to ask is, what, out of what you've read here from everyone else's and your own feelings on this, what's the first video that you want me to produce? You know, I know that I should, you know, but there's a lot of differing views on, you know, people's answers to question 3. It's based on time. Some of the problems obviously I've answered, and I can go into a bit more detail if you want me to on some of these. But what is the first video that you really want me to do? You know, is it stops? Is it using a certain indicator? Is it finding supports and resistances? Is it you know, it's got to be something that I can show. You know, I can talk about discipline, I can talk about uh, you know, trading, keeping journals and whatever, which I want everyone to do. But I want you guys to come back with me on what you feel you should you two things. In fact, if we do two, if we have one where you want me to, what's the first video in terms of a charting video that you want me to do and show and explain. So what it is you want me to do there. And the second one is, what would you like me to talk about? Two different things. The first one is going to be a practical one where I'm saying, you know, explaining a certain technique and going and showing you how that's done. And the second video is more of me discussing something. What would you like me to discuss? What would you like me to talk about? If there's anything, you know, there might not be something. So I think that'll keep us busy for now. There's 3 different posts. Make sure you watch the videos, make sure you understand what it is I'm asking you to do. It's important that you do this. It's important that you get involved. It's important that you do the things I ask you guys to do. And it's highly important that you just get involved in this and you know, work and discuss things actually on the blog and with me, and comment on other people's comments, and we get this whole rotation thing going on. So yeah, so that's what we need to do, guys, and I'll give you a few days to do that. Probably I'll come back in the middle of the week, and middle of next week, see what replies we've got, and then we'll then do another series of videos and see where we go to from there. Okay then, guys, and I hope you've enjoyed these videos. I hope I've not gone on too much, and make sure you do the things that I've asked you to do. Okay,